Good morning, everyone, and happy Monday. It is Julie here with your morning market update, where we're getting you up to speed with what you need to know as the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. I hope you had a wonderful weekend. As usual, this morning, we'll be taking a look at exciting stock market news, notable earnings reports, and we have a big week ahead for those, plus which stocks are the morning's biggest gainers and losers. We'll be taking a look at the data on the TipRanks platform to see how the analysts weigh in as well. You can download the TipRanks mobile app by following the link in the description. Now, let's get right into this morning's exciting stock market news. U.S. stock futures are slightly in the red this morning as investors brace for a busy week. Right now, Dow futures are down 0.10%, S&P 500 futures down 0.09%, and NASDAQ futures down 0.08%. Tesla has increased their guidance for expected capital expenditures, and at the same time there is a report suggesting that they may start shipping Chinese-made vehicles to North America. According to a report from Reuters, they cited a production memo that the EV maker is getting ready to export Model Ys that are manufactured in Shanghai to China. Earlier this month, the company began producing a version of its best-selling Model Y at its Shanghai factory. It is set to become available to Canadian customers between May and July. The company filed a 10Q filing saying that their higher capital expenditure will be due to a number of projects underway, including multiple gigafactories, battery cell investments, and AI-focused spending. Analysts currently rate the Tesla stock a moderate buy with an average upside of 25%. They have been circling the drain for a while, but Bed Bath & Beyond has now officially filed for Chapter 11 bankruptcy. The retailer does plan to keep their 480 stores open for the moment as they attempt to auction off assets through their restructuring process. They said that if they successfully auction off one or both of their brands through the bankruptcy process, the firm will pivot away from any store closings needed to implement a transaction. They believe this dual path process will maximize their value. And Lyft gained 6% on Friday after their new CEO announced plans to cut about 30% of their workforce. This will be the third time in the last 10 months that Lyft has cut jobs as they look to eliminate 1,200 positions. They noted the company's plan to deliver affordable rides, compelling earnings for drivers, and profitable growth as they work to gain back ground from Uber, which they've been losing to for a little bit now. Analysts currently rate the Lyft stock a hold with an average upside of 35%. Now, moving over to notable earnings reports. We have a very busy week ahead of us for earnings, with a ton of big-name companies filling up the calendar. On Tuesday, we'll be hearing from tech giants Google and Microsoft, along with other big names like Pepsi, 3M, Halliburton, and Enphase. On Wednesday, we have Boeing and Meta Platforms, along with Teladoc. And Thursday, a very busy day. We have American Airlines, Amazon, Southwest, Altria, Activision Blizzard, Pinterest, the list goes on. And we'll wrap up the week with Chevron and ExxonMobil. In the pre-market this morning, we've heard from beverage behemoth Coca Cola. Their stock is up slightly after an earnings and revenue beat, plus strong growth in organic sales. Organic sales rose 12% in the first quarter, while they reported earnings per share of 68 cents, which beat expectations by 3 cents per share, and revenue of $11 billion grew nearly 5% year-over-year, beating expectations by $220 million. Analysts currently rate the Coca-Cola stock a strong buy with an average upside of over 7%. We also heard from Credit Suisse, and that was an interesting one as the company shared they had outflows of $69 billion in their first quarter. Of course, these massive outflows happened back in March after a statement was made by Credit Suisse's largest shareholder. Then this was shortly followed by UBS's group rescuing Credit Suisse. The company stated that while the outflows have since stabilized to much lower levels, they had not yet reversed. Credit Suisse stated that they expect a decline in full-year net interest income as well as recurring commissions and fees due to the significantly lower deposits. Analysts currently rate their stock a hold with an average upside of 230%. And we also heard from Phillips. Their stock is on the rise, currently up 12% after their earnings and revenue beat. For their first quarter, Phillips reported revenue of €4.2 billion, beating expectations by €210 million. That grew over 6% year over year. They reported earnings per share of 22 euro cents, beating expectations by 14 euro cents. Analysts currently rate the stock a moderate sell with a downside of 26%, and the most recent rating being from a couple months ago. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by the Phillips stock following their earnings report. Trading under the ticker PHG, the stock is now up over 13%. They're followed by CVB Financial under CVBF up 6.8% and Alvotech under ALVO up 5.7%. And our biggest losers this morning are led by Stellantis. I wasn't able to find any news this morning that would explain the decline. They appointed a new CFO last week. Trading under the ticker STLA, the stock is down 7.35%, followed by C3AI under the ticker AI. They actually just jumped into the biggest loser spot at 7.48%, and Korn Ferry under KFY down 6.3%. So that is going to be everything for Monday's morning market update, getting you up to speed with what you need to know as the market opens. If you made it to the end of today's video, don't forget to hit that thumbs up button and say good morning in the comments. I always love hearing from you guys. Thanks so much for watching, and I'll see you back here next time.